What if I told you the US dollar just lost its biggest weapon, and almost no one noticed? This isn't a warning about the future. It's already happening. Global powers are quietly rewriting the rules of money, and if this move succeeds, the shockwaves could hit your savings, your job, and the entire US economy much faster than anyone expects. For 80 years, the world has operated on a single, unshakable truth. The US dollar is the sun around which all global commerce orbits. It's the lifeblood of trade, the bedrock of reserves, the invisible hand guiding prosperity. We were told this system was eternal, its dominance as permanent as the oceans. What if that was a beautiful, dangerous lie? And what if, right now, as you watch this, the very architecture of that global order is being dismantled, brick by digital brick? This isn't speculation. This is an autopsy of an era, performed in real time. The patient is still breathing, but the vital signs are failing. On January 15th, 2026, a seismic shift occurred, one so profound that history books will mark it as the beginning of the end. The BRICS alliance, no longer a loose economic club but a geopolitical spearhead, officially launched the unit. This is not a cryptocurrency. It is a new gold-anchored settlement currency for international trade, backed 40% by physical bullion and 60% by a basket of their national currencies. It is live, it is operational, and it has just provided nearly half of humanity with a functioning exit door from the dollar-based system. To understand why this is catastrophic for the dollar's monopoly, you must first understand the breathtaking privilege that monopoly bestowed. Picture the global economy as a grand casino established in 1944 at Bretton Woods. America was made the sole banker. Every other nation had to buy chips, US dollars, to play at the tables of oil, grain, and microchips. The banker, crucially, could print those chips at will, exchanging paper for the world's real wealth. Commodities, manufactured goods, intellectual property. This was the exorbitant privilege. Its mechanics are brutally elegant. Because the planet needs dollars to trade, there's perpetual artificial demand for the currency. This allows America to run staggering permanent trade deficits, consuming far more than it produces, without the currency collapse that would instantly cripple any other nation. It allows the US government to finance titanic deficits by selling treasury bonds that foreign central banks must purchase to stockpile their dollar reserves. The result? Cheap imports for American consumers and seemingly limitless, cheap debt for the US government. Our entire standard of living, the affordable electronics, the cars, the very structure of our economy, has been subsidized by this global demand for green paper. We didn't build this prosperity solely on innovation. We built it on a financial monopoly. But every monopoly sows the seeds of its own destruction. The resentment of those forced to use the banker's rigged chips grows. And when the banker starts changing the rules mid-game, confiscating chips from players he dislikes, the smartest players at the table decide to build a new casino altogether. That construction phase is over. The doors are open. The BRICS unit is the new gaming floor. But what happens next will change everything, because the first irreversible step has been taken. The foundation of the old casino is now cracking, and the pillars that held up the dollar's empire for 8 decades are being pulled down one by one. The first to fall was the most critical of all, but what happens next will change everything, because the first irreversible step has been taken. The foundation is cracking, and the pillars that held up the dollar's empire are being pulled down one by one. The first to fall was the most critical of all, the petrodollar. For 50 years, this was the keystone in the dollar's arch. Forged in a 1974 pact with Saudi Arabia, it decreed that the world's most essential commodity, oil, would be traded exclusively in US dollars. This created a self-reinforcing loop. To buy oil, you needed dollars. To get dollars, you traded with America. To store those dollars, you bought US debt. It was a perfect cage of dependency. That cage is now empty. In January 2026, Saudi Arabia formally joined BRICS. This wasn't a diplomatic flirtation. It was a financial defection. The kingdom is now negotiating to sell its oil to China for units or yuan. Russia and India already settle oil deals in rupees and dirhams. The unthinkable is routine. The lifeblood of the industrial world is flowing through pipelines that bypass the dollar entirely. The petrodollar is not sick, it is deceased. We are merely witnessing the reading of the will. Simultaneously, the second pillar, the deep market for US Treasury debt, is being deliberately eroded. Look at the silent run on the bank. China has methodically reduced its treasury holdings from a peak of over $1.3 trillion to a mere $680 billion Russia, after the 2022 sanctions vaporized its holdings. They aren't just selling, they are executing a strategic retreat. And what are they buying with those dollars? Gold. Mountains of it. BRICS nations have become voracious, net buyers of physical bullion, securing the tangible backing for their new system while divesting from the debt of the old. This is where theory becomes terrifying mathematics. The United States currently runs an annual trade deficit of nearly $800 billion. We consume $800 billion more in real goods and services than we produce. This has been possible because we pay with dollars the world is forced to accept. But what happens when that forced acceptance ends? When the BRICS bloc, representing 46% of humanity and a quarter of global GDP, trades oil, gas, food, and machinery, internally using units or local currencies, the artificial demand for dollars evaporates. The currency's value plummets. Imagine a store where everything you import, from gasoline and groceries to medicines and microchips, instantly costs 30%, 40%, 50% more. Your paycheck is static, but its power melts like ice in summer. This is not inflation as we casually know it. This is a currency crisis, a fundamental repricing of an entire nation's economic standing on the global stage. The government's finances face a parallel doom loop, with foreign buyers fleeing treasuries. Who funds the $2 trillion annual deficit? Interest rates must soar to attract buyers. As the existing $38 trillion mountain of debt refinances at these higher rates, the annual interest payment alone could consume every dollar collected from personal income taxes. The options then? Catastrophic austerity, politically impossible tax hikes, or the nuclear option, the Federal Reserve printing money to buy the debt itself, hypercharging the very inflation the crisis created. It is a financial death spiral. And this is where the video takes a shocking turn, because this shift isn't happening in a decade. The timeline is collapsing. We are not at the beginning of this story. We are in its accelerating middle acts, and the speed is due to one unforgivable mistake. And this is where the video takes a shocking turn. Because this shift isn't happening in a decade. The timeline is collapsing. We are in its accelerating middle acts, and the speed is due to one unforgivable mistake. History shows that reserve currencies don't fade from a lack of competition, but from the arrogance of the issuer. The British pound ruled for a century until the costs of empire and war made its promises fragile. The transition to the dollar took a generation. Today, technology compresses that timeline into years, and America has provided the perfect accelerant, the weaponization of its own financial system. Every time the U.S. uses the dollar as a cudgel, freezing Russia's reserves, cutting nations from SWIFT, seizing Afghanistan's central bank assets, it broadcasts a stark lesson to every watching capital. Your dollars are not yours. They are a weapon we hold against you. This doesn't foster compliance, it fosters fear. And fear is the ultimate motivator. China, India, Saudi Arabia, and dozens of others didn't just get nervous, they got to work. They built the alternatives. China's CIPS to rival SWIFT, digital payment bridges, and now the gold-backed unit. We handed them the blueprint for our own monetary undermining. So, what is the realistic timeline? Watch these markers. By late 2026, if unit trading volume surges past $500 billion per quarter, the system is viable. If a major, long-term Saudi-China oil contract is signed in non-dollars, the petrodollar's obituary is finalized. By 2027, 2028, if the dollar's share of global central bank reserves falls below 50%, the psychological Rubicon is crossed. The monopoly is broken. What does this mean for you? It means the financial landscape of your life is about to be reshaped. If 100% of your wealth, your savings, your investments, your home, is denominated in and dependent on the strength of the US dollar, you are standing on a single trembling pillar. Diversification is no longer an investment strategy. It is a survival tactic. Consider hard assets with millennia of credibility, physical gold and silver. Understand the role of decentralized digital assets like Bitcoin in this new paradigm. Allocate a portion of your portfolio to international equities, particularly in economies positioned to benefit from this multipolar shift. Think commodity exporters, manufacturing hubs in the East, and regions with less dollar-denominated debt. Real assets, productive land, critical infrastructure. Energy will hold intrinsic value as paper currencies convulse. Sectors built on the old dollar privilege will face existential threats. Luxury retail reliant on cheap global supply chains. Companies drowning in dollar-denominated debt. And the entire U.S. Treasury complex if foreign demand dries up. Conversely, sectors aligned with the new reality may thrive. Exporters who benefit from a weaker dollar, companies with irreplaceable technology and pricing power, and the entire ecosystem around tangible commodities and energy production. This is not doom porn. It is cause and effect. It is the mathematical endgame of an unsustainable privilege. The American standard of living, artificially elevated for decades, will recalibrate to the nation's true productive capacity. The free ride on the world's savings is reaching its final stop. The world you were born into, where the dollar was king and that kingship felt like a law of nature, is passing into history. What emerges will be more fragmented, more volatile, and for the unprepared, more brutal. But for those who see the tectonic plates shifting, who understand that the greatest financial transition since Bretton Woods is already underway, there is not just risk, but also opportunity. This is the great unraveling and the great reordering. Ignoring it won't make it stop. Only understanding it will allow you to navigate what comes next. This has been an examination of the silent war being waged in the basements of central banks and the ledgers of international trade. If this perspective cut through the noise and showed you the deeper currents shifting beneath the headlines, your journey to understanding must continue. Subscribe to Economic Tales and hit the notification bell. Our next investigation breaks down the exact historical playbook from the collapse of past reserve currencies, the patterns, the survivors, and the specific assets that preserved wealth when the old monetary order died. That video is essential. Stay informed, stay prepared. The future belongs to those who see it coming first.